take our we all take our gambling too serious. Hello, Warriors. How's everyone doing today? Do you guys think that we ever take our gambling, I mean trading, a little too seriously? Just lightening things up a little bit. I think it's really interesting with the inflation narrative that everyone has embraced, that yields continue to fall. And I'm starting off here with the TLT because when I was talking to you guys yesterday, we were here and I talked about this pattern being incomplete, that I was expecting one more high to complete this pattern. Wasn't sure what was going to be behind it, but here's one of the suspects, declining oil market. So that's one of them. And, we do have NFP on Friday. That would be a classic day. I see a lot of inflection points on NFP Fridays, in the dollar I have and interest rates I have, really across the board in most instruments. You can see some inflection points on that number, and that's why I keep some ammo dry and don't try and go into it trying to guess the outcome and hope that my positions work out for me. So I just wanted to start off with interest rates, and TLT is not open yet, but even the 10-year has fallen further than I thought it would. I had this red line drawn similar to what we had down here, where we had a throw under or throw over under the channel line. Good morning, Doug, Daniel, Michael, all my trading warrior brothers at TradeGate Hub. Invite everyone to come and join us. We have some great traders in here. I interviewed Mike Venezia last week, and yeah, I know that Michael took advantage of a lot of the strength that we've had this week so far. But anyway, I want to get back to this. That it's going to be interesting to see where the 10-year goes if I'm right about TLT making new highs. One of the clues would be the 10-year not making new low, taking out this 113 level. So we'll see if this is just going to be a temporary throw under, just like we had here. But the key was, as a currency trader, you guys that are listening to this on FX Street, I've been pounding the table about US dollar yen weakness all the way back from here, and then after this rally failed, and particularly on the Fed day, and I always thought that just like the TLT pattern was incomplete with three drives, that so too was US dollar yen. It's coming in just a shade under 108, but why can't we even go to the 200-day moving average? I'm not expecting this to be a major top and, the ensuing of a new bull market in bonds. In fact, I think that this next thrust up in the 30-year could be terminal. When you look at a weekly chart, we're approaching a lot of resistance at this 54.5 level. So at this point, I'm not looking for new highs in bonds. I think we're closer to a short up here around 154.5, 155. I'm going to want to see how TLT acts on the 4 hour. Here, I'll teach it again. Eventually, you guys are going to learn this about three drives because I see them all over the place. I've gone to a psychiatrist and told him, all I see are three drives everywhere. And he said, "What's that, Mr. Pinkert? Is that two mulligans? And then you get another one?" No, it's a technical formation, Mr. Freud, Dr. Freud. And here's drive one with a confirmed high, RS reading in the 80s. And when you have a confirmed high, as a trader, you should be looking to buy a pullback because markets normally don't peak when momentum is confirming price, which happened. So after this little pullback, we made a new high. So you don't know if the new high is going to confirm or not confirm. This did not confirm. but the reading of over 70 is just too much momentum. And now, if we get this rally to new highs, maybe 154 and a half, 55, like I said, or just a shade over this high, and which is 152.70, that perhaps the RSI on the 4-hour TF will not surpass this for sure. And ideally, it'll stay under 70. So if we do a little work before that happens, that may not happen. Maybe we fail from here, but I'm looking for a three drive pattern there and also in the yen. So, I've been talking about this in the yen. And I'd say the only part of the correlation that really didn't stand up to it, lower US dollar yen, which is actually a stronger yen, leads to lower yields, which normally leads to higher precious metal prices because there's less opportunity costs as rates go down. And gold's trying to hold. I mean, it's an awful lot of tests of this breakout that happened last week that has me a little skeptical. Meanwhile, silver, I said, looked like some type of bull flag. Silver's outperforming. So, the metals at the best get a C minus for not rallying, but really just holding with yields falling quite dramatically in the last week or so. So just wanted to point it out, and that could be coming to an end. Maybe it'll be buy the rumor, sell the fact on a weak jobs number on Friday. But anyway, keep your eye on this TLT because I know a lot of traders and great analysts say it's all about yields. And as a currency trader, you have to pay attention to it. So normally with this going on, we'd have a much weaker dollar, right? But look at Canada, and I thought Canada had one more break left in it. I was looking for about 123, and we paused right here. I'd say resistance is going to come in around 126. We start getting through that, we have another move to the upside, and the correlation between Canada and crude is tight at times, and this 2-day bounce in Canada, I think, with the dollar mainly moving sideways, right? What's the dollar done in the last few days? Nothing, right? But with oil under pressure, and what's interesting is it's talking to some of my trader friends today, and I said, well, was it some type of supply news, or is this really the sell-off in oil a demand argument because of Delta globally? Some countries are handling it better. You can go all the way from tough lockdowns. It's not a lockdown in Australia to just remasking here in the US. A lot of confusing data, but perhaps a global demand of oil because of Delta or other variants and other measures that countries are taking, even though some are reopening, could be what's behind it. In fact, when you see a big move in a market, you could write this down. You see a big move and the reporters aren't, they didn't forecast the move, but normally they'll come on, they'll say, well, the market was up because of what Paul said, or oil was up because of an OPEC decision. So when you find moves that are happening without a news backdrop, something that can explain it specifically, it even gives that move more credence, in my view, because it's not news driven and people are trying to figure out why it's happening. Usually, they'll find out much later. Once we find out what's behind the break in crude, it'll be time to cover shorts. But I think you get my point. Is that when markets make moves without fanfare and headlines, and no one knows why, pay attention to that market because it isn't news driven. It's most likely insider driven by the strong hands buying or selling on that move because there might be news in the future, but that's not behind what happened here in crude. If you'd like to leave a comment under my video, if you know why crude broke $4 or so in the last 24 hours, you can let me know. But this actually opens the door for crude being in some type of failing rally here. Okay, so that's significant, and we means that we could probably challenge these lows and could be headed back down towards 60. I know guys are looking for 40. The jury was out after this recovery, but it looks like it's under a lot of pressure. The weekly will be a little screwed up because of that negative day, but let me go to a log chart. Yeah, and you have a 2-week reversal happening here this week. If we close by Friday under 7206, okay, so we're quite a bit. We're down almost $2 right now. Also, here's another industrial commodity, and I showed this last week and said, could we be developing a head and shoulders top? And that was up here for a potential right shoulder in copper. Copper under pressure. Looks like it's going to be headed towards its neckline in fairly short order. Is going to come in a little bit under 420. So we want to watch this. So when you think about it, what's the message behind falling, economically sensitive commodities like oil and copper, and then the yields are falling as well? Kind of says the inflation narrative that everyone's bought into is not as pat, at least for now, and that there's maybe not the end of this commodity super cycle, as some people want to call it, but a pause. And we've had a couple of years of pretty good action in commodities. Gold from 1050 to where it is now, and silver from 12, $13 to where it is now. Let alone what was happening in grains, which are starting to give back. So we're having a pause. Actually, uh, this would be really after this pause is over. You could look for what if you were excited by what happened before. Say, for example, I know perhaps you guys don't trade this stuff, but let's take a look at the soybean market. So this was one of the biggest moves in grains, and I love the grains. They trade very well technically, but look what they did in a year. Beans doubled. Okay, so if you like this move, there's going to be another opportunity. I'm figuring around $12 for long-term grain positions, commodity positions after this pause in the inflation cycle terminates. Okay, so let's just move on to the Aussies trying to rally, having a decent week. We'll see if it's going to hold or not. I have no position. There'll be things that I'll say I don't know because it looks like it could do either here, right? We could roll over and flush one more time, or we could continue to grind higher. I think that it could be under pressure because of what's starting to happen in the S&P market. So yesterday I was short at the 2-week off number and early because I did it Sunday night. But the 2-week off number in the S&Ps is 4401. Huh, 44. Oh, hold on, it's this week. It's 4409. Okay, count back two. So this is the weekly off number for this week, and on Sunday night, I sold one up there and, took some heat. So I put my stops in over the highs and took half yesterday. But if we start taking out a couple of areas, important areas like, 43 right here, 4370, 60, and then 4240 down here, we'll have at least 3,900 in it. And the S&Ps are underperforming. They're down today and so far failing from the weekly off number, while Nasdaq's still trying to hold up. But if you take a little closer look at Nasdaq, the S&P's made a new high last week, right here. This was a new high, whereas Nasdaq did not make a new high last week. It almost did, went to the 88.6 fib, almost got there. Then we had another big break and it rallied back into yesterday's high at 78.6 and trying to hold this 50% level. So if we could take out 149 and a half, I think the market could be vulnerable. So, but for today, S&Ps are, look at the difference between the two candles. So be short the relative weakness, and right now it's the S&Ps. Let's take a quick look at Russell. Russell selling off after yesterday's rally back to this moving average. So, the Russell has frustrated both longs, right? And then shorts. So who's left? Okay. If we tag this low in daily 200 day, again at 209, there's trouble not just for the Russell, but for the rest of the market. So we'll see. Let's look at a weekly here. The weekly off number, we're right there. It looks like it's 219.55. We're underneath it. We're at 218.43. So this could have been one more last hurrah. And we'll see what's happened with the Russell. Russell has not made a new high going all the way back to the equinox in March. So I wanted to take a quick look at that as well. Moving on. Euro GBP. Well, first let's do the Dixie. Dixie, again, kind of a quiet week. All right. I was thinking that we were going to get a rally back to 92 and a half. That might be a sale, and that's a possibility. I mean, Euro has gone from higher on the day to lower on the day, and to me, it looks like it's setting up some type of flag. I'd be looking for buys in the Euro, um, especially if there's dollar strength into the NFP, but between these levels, 1850, 1830, wrong under the lows of the move, maybe 1750, because it's starting to look like a flag pattern to me. So I still think the euro has another pop left in it. Um, Major resistance is at the 120 level, but we may not get there. But I could see 1940 or so. So could be 100 pip trade. Here's the 9-day moving average trading right there at 1830 as well. And I prefer the longs in the euro than cable. I think cable's more vulnerable at this stage. And, I've been talking about euro pound and yesterday took some profits. To me, it looks like it's just consolidating. And regardless of directionality of the dollar, I do believe the euro is going on a relative basis. It's going to outperform cable. And if we break through this resistance at 85 and a half, I think 87 is doable. First is 620, but to me, it looks like the potential for a low is coming in. Here's your 4 hour, um, another resistance point. So you could go 85.60 would give you 86.20. And I'm actually looking for this level, 87.30 to confluence up here at 88. So I think there are a lot of people that are looking for lower levels. And if they don't get it, I think there is short squeeze potential in this. My stops are under last week's lows, already took partial profits on it. So here we go in the gold with a weaker yen. It's trying to do something right. And, I guess you have to be patient, but I would not hold, if you're long gold from anywhere in here in this recent pullback, you're wrong on a close that we tried last week, but only traded underneath there. Maybe we took out some sell stops, but you don't want to see gold close back under 1800 if you're a gold bull here. And you can make the case if the dollar's going to weaken after some, say euro holds this 1835 and Dixie um, fails from say 92.5 and sells off one more time, how the metals could be pretty well supported on that. Um, just want to show you the VIX still. I still believe it's under accumulation. Here's your daily chart. S&Ps are not too far off recent record highs. VIX well off recent lows, and these aren't even record lows. I mean, this whole regime change during the pandemic, and I don't know if we'll ever see in our lifetime again these kind of volatility levels. So I'm still looking for a move to the upside in the VIX, and it's starting to look like it wants to knock on the door here again at the 20 level. So I don't see anything bearish. I see higher lows. I see some higher highs, and perhaps we get some type of three drive formation here. You see this high, this also gives me confidence that there could be another high coming down the road in VIX, because look at the momentum on it. It's 80. So you had this rally and you had a big price rally, but you also had momentum confirming it. So to me, that implies that this most likely is not the high of VIX, because it didn't make this new high with a lower high in RSI. It actually confirmed on RSI. And let me just take a look at where this three drive may come in. That line's a little bit off, so let me fix it. Looks like in the 30 range, it looks like to me now. Let's see. Yeah, pointing up towards above this high. So that's my wrap for today. Any questions before I say goodbye? Anything I haven't covered? Getting a little bit of a pullback in crypto. Take a quick look at this. Bitcoin from 42, kind of pulling back. So, we're kind of in no man's land. If you think this was a low, and it was at least a great trade, if you're not a holder and you're a trader, this was a nice trade. Let's see what happens at 34.6. That's still another 4K underneath it, and actually pretty good action here. I'd buy a pullback in Ethereum back to about 2100 or so. Give it a shot and be wrong under this low. Just because a trader I know who's very good is very constructive on this. And I think that's going to be a wrap for today. So let's keep an eye on TLT. Looking for one more push up here. It's not that far away. Could be a few days away. Could be into the NFP. And I think that's it for lower yields, and they'll flush a lot of people out of the way on that. And S&Ps are acting like they want to try this magnet down here, 43.29. I invite everyone who's watching us on YouTube, come into tradegatehub.com, share your work with us. If you're a newer trader and you're looking for guidance, part of what I do when I'm posting there is I give the whys of what I'm looking for. So if you learn the whys, eventually you could do it on your own and be independent of everybody. But if you just follow someone and just take their trades and you don't know why they're doing what they're doing, what if they, retire or, stop providing that to the public? Then you're lost. So, you need to learn why you're doing what you're doing in the market so that you could repeat the things that work. And I'm a big believer in journaling and limit the mistakes while you're changing your paradigm. So, as I end every broadcast, remember, don't just count your pips, count your blessings. Check us out if you like what I'm saying here on YouTube. Appreciate the thumbs up. Any comments, any questions, you want to reach me to talk about anything, feel free to reach out. And that's a wrap. Good hunting, everyone, and see you tomorrow. S&P's breaking, even NASDAQ now.